Good morning, everyone. It's my absolute pleasure here today to discuss some of the opportunities we see in the markets and how do we think about China, especially after the pandemic world. So today, I think in the next 10 minutes, I wanted to introduce BMYG to all of you, discuss what we do, and some of my advice to investors and also companies after this whole pandemic thing. BMYG, I'm the founder and CEO of BMYG. We started back in 2010 with a mission to help Australian business with Asian capitals and also the market opportunities. Our vision is to help investors with borderless wealth and also to unlock unlimited opportunities. Along those years, we have set up the business mainly focused on wealth and funds management. We currently manage over $300 million. Our clients are typically high net worth individuals and their families, especially with Asian backgrounds. We currently have a team of 35 with offices in Melbourne and Sydney. And we have a fantastic financial media business in Chinese language with over 77,000 social media followers. And currently we have over partners and clients over 20 Chinese cities in China. Just in a nutshell, there are four business units we have. We do funds management, we do wealth management, we do a bit of advisories, and also we have a trustee service for funds managers. Those are some of the funds we have run in the past. I think the funds pretty much have three different categories. We have a credit funds. The credit funds make investment into property credit and also some fixed incomes. We have equity funds. Currently, there are investments in IPO and pre-IPO deals. Technologies, which is something we do for a very long time, which is something we like. A lot of my personal investment goes into technologies as well. We also have a venture capital and private equity fund of funds. We make a direct investment into other Australian funds managers. We also have two US dollar funds we set up. The first one was a direct investment into Airbnb. And the second one was a direct investment into a drone technology company based in China called DJI. This company has 70% of the consumer drone markets globally. Those are some of the deals we invested in the past, from listed companies like Medibank to unlisted company like Wholesale Investor, which is still happen to be one of my favorites. I'm pleased enough to be on the board with Steve Tossell and his team for the last nearly 3 years. Just a very quick one on the other brands we have, Allfin. Allfin is like a financial review, but in Chinese language. As I mentioned, there are 77,000 social media followers, and we cover nearly 2 million visitors on the site and the social medias. Today, I think what I'm wanting to really talk about is some strategies we think after pandemic. There was a lot of articles, I think, talk about what the world is going to look like, and also the world pretty much got into a new order after this whole pandemic time. But I think there's one thing we believe strongly, and also we share a lot of the beliefs by Square Capital, Blackstone, Goldman Sachs, and etc. That is long China. I think China has become a different country in the last 10 years. I'm going to share with you some of the numbers, but you can clearly tell that China is surely in a different shape of economy, political status, and also we strongly believe that in the next 10 years, China will continue to grow and also become the world's largest economy very soon. According to a lot of research, according to Bloomberg, Thomson Reuters, and a lot of investment banks in the world, everyone's suggesting the same thing. In the next 10 years, in the next decades, from 2020 to 2030, China will become the largest economy in the world. It's a matter of when. It's a matter of 2022 or a matter of 2028. But According to some of the research, I think this is one of the research I want to share with you today. According to Standard Chartered, that by 2030, China will be double the size of United States. USA will be even, the economy in USA will be even smaller compared to the economy in India. So if you keep that in mind, and also think about what happens today, that if we wanted to have, I mean, talking about investments, talking about business growth, we have always been taking the rides on the trend. So surely the trend in front of us is China will keep growing and China will be stronger. And also China has been becoming a different country. Honestly, I mean, the economy has been changing a lot in the last 10 years. I think when we talk about China back in GFC or even before GFC, everybody was like, okay, China is heavily rely on exports. China is heavily rely on the European countries to buy their products and services. But if you're looking at the chart in front of you right now, China has become a totally different economy comparing to 10 or 15 years ago. Firstly, on the left-hand side, you can tell that USA nor European nations are no longer the largest trading partner with China anymore. It's actually the Asian countries is now the largest trading partners with China already. They are the largest buyers of Chinese products, and also Chinese investors are heavily investing into those countries. This all the way go from Vietnam to Indonesia, to India, and everything. You're gonna see a lot of infrastructure deals backed by Chinese capitals in those countries, and also Chinese VCs are buying a lot of investment opportunities, all the way from healthcare to fintechs, e-commerce, etc. China is becoming more influential in this region when they're becoming a large trading partners with China already. And the second thing on the right-hand side, on the other chart, this is something I also want to show you, is export is also no longer the biggest component of Chinese economy. If you talk about 2006-7 before GFC, exports counted nearly 35% of Chinese GDPs, but now it's only less than 20%. There's another number I want you to know as well, is domestic consumption is still counting for nearly 30% of Chinese economy, and this has been like that in the last decades, nearly last decades. Domestic domestic consumptions is now becoming far more important to the Chinese economic growth compared to the export. So when we think about global trade, etc., China surely still heavily rely on global trade, but the Chinese market itself, with 1.4 billion people, is actually a pretty interesting market by itself. And even in China, we always know that there has been upgrades in the Chinese consumptions. We always talk about the middle class there in China. They wanted to buy luxury products and also healthcare products globally. But also at the same time, if you think about the third tier and fourth tier cities, those are the massive populations there. Those are the people, they just start to pick up e-commerce. They're still buying a lot of low-cost products as well. So in China, China is not just one single market. It's actually have multiple tier of markets. So it doesn't matter what sort of product and services world is offering to China. There's always a market for that. So China itself is basically, I think, sufficient enough to navigate through this kind of pandemic situation. This is something I found on the internet. I want to share with you that this is pretty much the middle of April in Beijing. As you can tell, after nearly 4 months fighting with pandemic in China, China is gradually back to normal. I think we should be fair to say China is really the first in and first out situations right now. You start to see traffic jam is getting back on Beijing's road on the right-hand side, and also you see the subway is pretty much getting crowded as well. And this last weekend is the Chinese labor markets, labor holidays. Actually, labor holidays for 3 or 4 days, labor holidays in China, and people are already going out to see their families, etc. So China is surely back on track, back to the growth trajectory. Surely this potential threat of the second wave of infection. But with what the Chinese government has demonstrated, they can have some really harsh controls with their citizens. So I think controlling pandemic is basically won't be that biggest threat right now for the Chinese government. So what we should be, to watch, what should we getting prepared with China back on track? I think there are three things. The first one will be infrastructure spending. This is what Chinese governments always did after some sort of economic downturn back in, I think 2011, 12, 2015, 2008, they did the same thing. So there could be another wave of massive infrastructure spending. This is actually really good for Australia, for our mining or export, etc. So this could be a really good opportunity helping Australia to get out of the economic downturn very quickly. There are two other sectors which also be really important, which is healthcare investments, technologies will also be quite interesting to watch. So taking that in mind, there are a few things we wanted to target in the next few months. I think the one thing is healthcare. In terms of healthcare, I think we can look at medical devices, medical devices ready for export, or well-being products. Chinese buyers has always been a fan of Australian well-being products, for example, Blackmore, Swiss, etc. I think this will also be the case going forward. And also technologies. Technology is an interesting thing. I think we have seen a strong trend of massive investment in online education in China and massive investment in fintech. Last week, Tencent, which is one of the largest fintech business and social media business in China, purchased 5% of Afterpay, drive up the price, share price for Afterpay by nearly 25%. And also remote services. I think everybody talk about Zoom. I think today we're using Zoom as well. Everybody talk about Zoom, but in China, people using something different. People use services offered by Alibaba and also offered by Tencent and Huawei, etc. And let's also do not forget that the infrastructures for cloud services is also booming as well. And everybody knows about Amazon's, but in China, a lot of people use Ali Cloud, which is also a subsidiary of Alibaba. So I think in terms of technologies, all those things will be under Chinese investors' radar going forward. So to finish up, I wanted to give some advice to investors and founders, and according to our experience in the past, I think, again, China will be the strongest economy and largest economy in the next decade. So do not bet all short on China. I think that is one simple advice to everyone. A lot of economies on the world, a lot of companies on the world, all the way from, I think, Apple, BHP, they all on, I think they're all on the trend to long China. I think so. As investors, we should do something similar. Advice to founders, I think, with a lot of successful Australian companies, to be successful in Australia, I mean, but we need to be successful globally to become a bigger business, stronger brands, etc. So I think about a global expansion, but also surely think about China. That'll be part of your growth for the next decades. So hopefully my presentation today will give you some thought about China after the whole pandemic time. If you have any inquiries regarding to Chinese economy, Chinese investments, and the Chinese interest in Australia, and feel free to ask questions. I'm happy to take some Q&As. And if you got any other questions after this, feel free to send me an email or give me a call. Thank you.